Hello and welcome to the 2021 virtual Acadiana Beef Cattle Producers Field Day. Unfortunately, because of COVID and regulations related to COVID, we're unable to meet with you in person, but we hope that you do enjoy these videos that we're able to develop and hope that they provide valuable information to you. We also hope that we can see the light at the end of the tunnel and that we will be able to be back in person holding our field days as we've done in the past in the very near future. My name is Kurt Guidry, and I'm the Southwest Regional Director and Extension Economist with the LSU AgCenter. And today I'm going to do a little bit and talk to you a little bit about the outlook for the cattle market. So if we jump right into it and look at some of the conditions that we've had to deal with and maybe some issues that we may look forward into the future. Certainly the cattle market has had to deal with several major factors over the last 18 to 24 months. Really, when we were in beginning the 2020 calendar year, there was quite a bit of optimism in terms of where we would see prices go, particularly over the last half of 2020. Supplies and demand had become much more manageable, and there was a lot of optimism that we would see calf prices improve toward the end of 2020. However, what we had happen was several shocks to the market. The most important one being COVID, really impacting the demand that we saw early, particularly from the food service industry, as restaurants and other food service companies had to shut down or slow down. We really did see the demand be impacted pretty significantly into those sectors. And certainly we also saw the impact of COVID as it related to the ability for our kill plants and processing facilities to operate. And so we did have a pretty significant impact in terms of not only from the demand side, but the ability to process and move cattle through the normal marketing channels. However, at the end of 2020, we started to kind of get a little bit more normal. And as we start 2021, I think there's a lot of optimism, particularly as we move into the middle and the latter half of 2020 in terms of where prices may be able to go. Certainly, we've been dealing and talking about smaller inventories over the last couple of years, and we do have smaller inventories. We're starting to see some of that be reflected in terms of cattle being placed into the feedlot. We have very strong domestic demand, even though we lost some demand from the food service side of it. I think at-home meals and at-home demand for beef did increase pretty significantly with COVID. And then we started to see a pretty significant resurrection in terms of export demand over the last half of 2020, which both give us very good optimism that we're going to see very strong demand into 2021 and beyond. So when we look at the supply and demand situation for cattle and for beef as a whole, there's quite a bit of optimism in terms of smaller supplies, improved demand, helping to improve overall prices that we see for both beef as well as for cattle. Now, that doesn't mean to say that we don't have some challenges moving ahead. As you may have seen, we've seen increased feed costs. Both corn and soybean prices have improved pretty substantially over the last half of 2020, and an outlook for those prices to remain relatively elevated in 2021. We looked at some other input costs, things like fuel costs have started to creep up, and we've seen those projections for fuel costs to remain relatively high into 2021. We've got some drought conditions, particularly over the western half of the United States, that may have some impact in terms of particularly the spring, in terms of demand for calves to be put on pastures, and have some longer term impacts in terms of what we're going to be able to see in terms of inventory numbers, particularly over that section of the United States. But all in all, we do have improved fundamentals, and I think we look at the possibility, the potential for prices to improve in the last half of 2021. All this is to say, this is the projections without any additional market shocks. Certainly over the last couple of years, we've had those shocks, whether it be fires and shutdowns in major kill plants to COVID. Those unexpected market shocks came in and really did kind of derail where we thought markets were going to go both in 2019 and 2020. I think again we're starting off 2020 with a very sound foundation, and without any significant market shocks, we should see some improvement as we move throughout 2021. Start looking at some of the inventory numbers. The next three slides are going to show inventory numbers, and this is just to kind of reiterate that we are working with much more manageable numbers than we've had in the past. If you look at total cattle inventory, those have come down over the last couple of years. You look at calf crop, and those calves that we may potentially see into the feedlot and into the marketing chain. Those numbers have come down pretty substantially over the last 2 or 3 years. And again, you look at in terms of total feeder cattle supplies outside of feedlots, and those numbers continue to move down over the last several years. So we're just going to hopefully start seeing those lower numbers start to really be reflective in terms of what we see both in the feedlot and total beef cattle production. If you look at net feedlot placements, and again, this is just for January 2021, we're a little bit above where we were in 2020. Some of the February numbers came in, and placements into the feedlots in February were quite a bit lower than they were in 2020, about 3 to 4% lower. We're starting to see some lower numbers being placed into the feedlot, which again, over the last half of 2021, will make that supply situation even more manageable. Again, we haven't seen cattle on feed numbers go down quite yet. But again, I think most of the projections is as we start to see those, obviously, as we see number of cattle going into feedlot being reduced, we're going to see total cattle on feed be reduced pretty significantly as well. There were some impacts in terms of the weather, the winter weather that we had in terms of being able to market and move cattle. So we'll have some cattle on feed numbers that will probably be a little bit higher in February and in March. But I think the growing outlook is for those numbers to start to move down to be more in terms of what we've seen over the last 4 or 5 years. Look at commercial cattle slaughter, and again, those numbers are starting to come down again. So we'll start to see some reflection in terms of total beef production numbers. And again, all these numbers again go to reflect the fact that the supply side of the situation is becoming more manageable. It's becoming more positive in terms of outlook for prices, both in terms of beef prices and then hopefully start to be translated in terms of fed cattle prices and down to calf prices. You look at average dress weights for steers. Those have run a little bit higher over the last in 2020, and then again starting off in 2021 a little bit higher. We'll have to keep an eye on that to make sure that we don't see those dress weights get too significantly high, that we could cause a little bit of a market correction in terms of fed cattle prices. I don't think we have anything to be too concerned about at this point in time, but it's something that we certainly have to watch to see if fed cattle carcass weights start to go up. That could have some impact on prices, at least short term. I think the reason that we saw those prices be, those weights be a little bit heavier than maybe what we've normally seen in the last 3 or 4 years was the uncertainty as it relates to market demand related to COVID. I think we're starting to see, hopefully, we're getting to the point where we're going to start having some more opening of markets, and we'll start to see demand and movement of cattle be at a quicker pace than what we had certainly over parts of 2020. Commercial beef production, again, we had lower slaughter. we're going to get to a point where we're going to have lower cattle coming out of the feedlots. And so we expect to see that production number go down quite a bit. You see here the big dip last year, and again, that was predominantly a function of COVID and a lot of kill plants having to shut down or to really curtail production because of COVID-related restrictions. And again, I think we see, particularly as we get over the last half of 2021, that we're going to see beef production become much more in line of what we've been in the past, and certainly be below what we saw in 2020. Jumping into in terms of demand, you look at beef and veal exports, and you can see particularly over the last half of 2020 that we saw a pretty dramatic increase in terms of exports over our 5-year average. Certainly as we're starting 2021, we're kind of in line where we were in 2020. And again, the projections are that we're going to see a relatively significant increase or a relatively steady increase in terms of export demand. Again, without a market shock, we wouldn't have saw this big downturn in export demand last year. And right now, if we take this and we kind of just trend it out, there's a lot of optimism in terms of where we might see exports go. What's been driving that? Certainly we have our normal customers. China has not been a huge customer for us historically, but you saw over the last half of 2020 that we saw a tremendous increase in beef exports to that country. And certainly as we're looking at where we're at right now in 2021, we're starting off the year in a much more favorable or a much higher level than we've certainly been. So you look at those two things, and certainly that creates quite a bit of optimism for export demand. Domestic demand continues to be strong, and we do think as we start to see the economy opening up and some more return to normal for our food service sector, that we're only going to see that domestic demand increase even more. So both domestic demand and certainly export demand look to be very, very positive. As I mentioned earlier, we do have some concerns in terms of feed prices going up. This is just the current projections from USDA in terms of both corn and soybean. We do expect to see a pretty big increase in both soybean and corn acres, certainly more soybean acres than corn. But when you look at USDA's projection for the 2021 crop and the 2021-2022 marketing year, you look at corn prices that look to be relatively stable in the low to mid $4 range. I think soybeans, because of the demand that we've seen both in export demand and domestic demand, that those prices look to be in the mid to upper $11 range. So for both of these, we do expect to see prices to remain at least where they have been over the last half of 2020 and have an outside chance to be a little bit higher. I don't think we're going to see the $6 and $7 corn prices that we saw several years ago, or the $15, $16 soybean prices that we saw. But I do think that we do have an outside chance that we could see prices, certainly again for corn in the low to mid $4 range, and soybeans for the low to high $11 range. I think the biggest thing that we need to be watching out is the weather conditions, and certainly any kind of major weather issue that we do have in this crop year could send those prices higher. I think if we have normal weather conditions, that we're looking at prices, as I mentioned, around $4 for corn and in the $11 range for soybeans. Really had to start to see that be reflected in terms of feeding cost. This is just as an indicator. This is Kansas Feedlot Closeout feeding costs, and again we're seeing prices there. Are we seeing their total feeding costs on their closeouts being about what we saw in 2020 in January? I think again we'd expect those feeding costs to go up a little bit over time, particularly with the sustained higher prices that we're seeing with grain prices. Talked about energy prices and fuel prices being a little bit higher. Again, you look at 2021 from 2020. The blue line is gas prices. The orange-ish line is diesel prices, and you can see for both fuel, gas and diesel prices, we see a pretty significant increase in terms of projections for price for 2021. This is the this is the Department of Energy's Energy Information Agency, and they are calling for those prices to be, 10, 15 cents a gallon higher on average for the entire year. If we look at the Drought Monitor, and you can see over the western portion of the United States that as of the beginning of March, that we do have quite a few areas that are having some significant drought conditions. How that plays out, and particularly for demand for calves for spring pastures, is yet to be seen. And then certainly longer term, if these conditions continue, the ability of our forced liquidation that may happen if we don't get some rain for some pastures. What we tend to happen in forced liquidations is that we, at least short term, we see some additional beef production. So that may curtail, I guess, some of the price optimism over the last half of 2021, if we in fact do have to or see some liquidation, forced liquidation, because of these drought conditions. If you look at slaughter prices, slaughter steer prices, and moving into the price situation, we've seen a little bit of an uptick here over the first portion of 2021. We're still at a discount to where we saw in 2020, and certainly we saw that big dip as we got into COVID. If you look at where we are in terms of feeder steer prices, again across the southern plains, somewhere in that mid 130, 100 weight range is where we're starting off. Again, a little bit discounted where we started off last year. And then if we look at calf prices, again in the mid to 150s to 160 is where we've been in the southern plains for that 500 to 600 pound calf range. We haven't seen yet to the point where we've seen kind of a close or a more close price per hundredweight value for the heavier calves, the 7 and 8 weight calves versus the 4 and 5 and 600 pound calves. Typically, when we see feed prices start to go up, we see that difference in the price per pound start to kind of narrow, meaning that on a price per pound basis, the 7s and 8 weights are pretty close in price per pound to the 5 and 6 weights or the lower calves. That typically is a sign that we should hold those calves a little bit longer and sell them at a little bit heavier prices. The market's willing to pay you to put that additional weight on. We haven't seen that closure or that closing of those two price points yet. That's something to keep an eye on. And certainly when we see higher feed costs, we typically see that it can benefit you to hold those calves to a little bit higher prices or heavier weights. If you've got some pastures that you're and some forage availability, put some cheap weight on those rather than sell them as 500 pound calves. Hold them for an extra 60 to 90 days. Sell them a little bit heavier, and that can be a profitable situation if we start to see those prices start to converge on each other. Looking a little bit closer to home, this is the Mississippi auction data, and you can see here for 5 and 6 weight calves, the blue line is where we were in 2020. So we averaged somewhere around the upper $120 to the low $130 a hundredweight range for those calves. We started off a little bit slower in 2021, but we were starting to see back into where we were in 2020 in terms of prices, somewhere around the upper 130s to low 140s. And so hopefully we can see those prices continue. We won't have the dip that we saw because of COVID. Again, the question becomes: is the drought conditions and the demand for calves for spring pastures, will that be there? Again, I think the overall optimism is that we're going to continue to see prices that are going to be at least what we saw in 2020, and with a chance to be, a nickel to 10 cents a pound higher than what we were in 2021. Excuse me, in 2020. Coal cow prices have started off quite a bit stronger than what we saw in 2020. And again, as we continue to move on into 2021, there's some hope that those prices will continue to be relatively strong. This is Louisiana cattle auction prices for the beginning of March. And you can see in 5 and 6 weight steers there, average about 120, but on the high end we're at 155, really for both auction markets. So we've seen again prices that are still relatively discounted, certainly where we've been over the last 3 or 4 years, but some optimism as we start this spring that we will see those prices continue to improve. USDA prices, projections for fed cattle prices, and again you can see here, particularly over the last 3 quarters of 2021, that we still see some pretty significant improvement in fed cattle prices. Hopefully that will translate into our feeder cattle and steer prices and calf prices. You can see here, particularly over the fourth quarter, we see a pretty big increase over that second quarter. We also see an increase. This is predominantly because of COVID-related situations last year and being back to a little bit more normal. And we see some improvement there over the latter half of 2021. So in summary, I think we have overall lower supplies and stronger demand as we head to the last half of 2021. I think most producers or most people out in the market are telling producers don't get in a big rush into selling calves. That we may see prices that steadily improve over the last half of 2021, particularly if you've got some flexibility in your operation to kind of hold and wait to see how prices do. The things that we're going to have to kind of guard against is that increased feed costs, and how does that impact feeder steer prices related to the fed cattle market. How those drought conditions in terms of particularly demand for spring calves for those spring pastures, how does that impact us in the first half of 2021? And then again, I think the thing that we need to look at as it relates to increased feed costs is that do we have some premiums for those heavier cattle? Is that on a price per pound basis? Do we see those heavier cattle bring closer to what we're seeing on a price per pound for lighter cattle? And again, if you have the ability, if you've got some pastures there, you've got some available forage, holding those cattle on maybe an extra 60, 90 days, not only to see that maybe that improvement in price, but also to capture some of that premium for those heavier cattle. And then the final thing that I'll say is in terms of market shocks, certainly we were at very good situation last year. We thought we were in very good situation to begin 2020, and then COVID hit to really kind of derail our markets. Again, I think we're in 2021. We have very good optimism for prices for 2021, again, without any kind of major market shock. So we'll have to hope that we don't have any additional major things happen or major shocks happen to the market. And I think if that happens, we don't get those shocks. We look for relatively strong prices over the latter half of 2021. We're not getting back to the $2 and $3 per pound range, but we could see calf prices increase anywhere from 5 to 15 cents per pound, particularly over the last half of 2021. With that, I'll stop, and this is my contact information. Feel free to give me a call if you have any questions. Thank you for being with us today, and we hope you enjoyed it.